Hello, good weekend to all. It's I'll bring you a review of the European markets for the trading session, the Monday, the 12th of March, or should I say April 2021. Please be sure to visit me or follow me on Twitter, where I'm most active, at trader_adil. And let's get cracking. Let's give you a review, an insight into European markets for the Monday's trading session. Okay, so let's start off in terms of the Euro USD. Okay, daily chart, Euro USD has pushed higher. Okay, impressive thrust here. If I just bring up the daily chart here, just look at the fib, and we retrace fib 75%. Very impressive. Pivot high, I think, at 1.1927 thus far in terms of the Euro USD. Impressive thrust to say the least. Okay, so for now, impressive. Let's have a look at the resistance here. Is at 1.1990 and previous support equals resistance at 1.1966. So again, looking for a weakness here in terms of euro to move lower. In terms of the euro pushing higher, so basically it's an inverse relationship that we are witnessing at present in terms of the euro and the European equities. Okay, and that's obviously led due to the fact of Miss Lagarde's QE experiment. Okay, so let's just quickly bring up the bonds here, give you a bit of an insight. Okay, so in terms of the bonds, as you can see here, pushing lower, negative. We've got support here for the bonds, so watch out. Once we get to this level, you are looking for a potential another thrust higher in terms of European equities. If obviously the euro bonds start to fail due to the concern regarding the infections increasing, so that's something else that we need to take into effect as well. So take into account as well. So on the one hand, you've got the bullish scenario in terms of QE, in terms of Europe. Okay, so all guns blazing, euro collapsing. And nobody caring about the fact that infection rates are climbing. The vaccine rollout is very slow and lethargic, and obviously we've got the ongoing war with regards to AstraZeneca, the blood clots as well this week, under 30s being stopped. Again, the Europeans were right there in terms of obviously exerting due diligence. That's what the regulator is there to do. Always on the side of caution. Okay, and they were certainly rewarded for that, given the fact that the UK medical association themselves have obviously stopped the vaccination for under 30s for AstraZeneca, and also Johnson & Johnson has now reported certain blood clots as well, given the fact that their method of inoculation is very, very similar. So you need to take that into consideration. So on the one hand, bonds under pressure due to the fact that European growth is lackluster. Okay, also due to the fact that we've got concerns regarding the rise in infections for France, Germany going into lockdown again. Again, that obviously hurts growth, and therefore that's negative, and bond markets take a hit. Okay, in terms of the ability for them to pay the debt. Okay, so bonds tumble given the fiscal concerns, and obviously yields start to spike, and that obviously is a doom loop. Okay, on the other hand, you've got the bullish argument in terms of the ECB's QE. It's regardless of the bearish news, ECB will step in, buy bonds. And obviously the inflation will creep into European equities, and therefore European equities are a hedge against inflation, and therefore you are going to get short squeezes. That will inadvertently cause the euro to fall, which again is a boon for European exports, and that obviously causes the European equities to push higher as well. So you've got that push and pull. Okay, so the question here really is a focus on these European or ECB bonds. Okay, so if the if the ECB supports the bonds here around the 171, 170 level, and obviously the bonds push higher here up to 173, push higher to 176, then obviously European equities obviously move in the opposite direction. Yes. Or should I say, move with the price of the bond. So I do apologise. So bonds go higher, obviously yields go lower, euro goes lower, given the increased QE, PEP, call it what you want. Okay, it's blatant market manipulation, and obviously the euro goes lower, and obviously German DAX goes higher. That's been offset by the concerns regarding the infection. So just take that into account as well. Okay, so that's basically an insight in terms of European equities. It's all about the QE machine. As you can see here, German DAX monthly chart very, very bullish. Weekly chart, as we already know, is bullish, but we've certainly stalled here. So again, keep an eye on this stall. Let's quickly bring up the volume data. Give us an insight in terms of the volume. So it's certainly a decreased volume. Okay, so interesting. I mean, this area was the real importance in terms of the increased, obviously, volume on the thrust and down on the upside. But obviously, since then, volume's dropped. So not exactly convincing, to say the least. Okay, so quickly bringing up a chart of the German DAX on the daily chart now. You can see here we've been stalling now for quite a while Is this consolidation for the next move higher, or do we actually start to move lower on the back of concerns regarding infections, concerns regarding growth, concerns regarding obviously lockdown, etc., etc.? Take that into account. Also the situation in Ukraine as well, keep an eye on that in terms of Nord Stream. Mr. Biden certainly has obviously basically interjected there as well, so that's something to keep an eye out for as well with regards to Ukraine situation, the movement there, and obviously the Americans certainly going back in, and in terms of the Russian and obviously US relationship, and also given the fact that Sputnik now potentially is being utilised, given the concerns regarding AstraZeneca, etc., and the spat between Europe and the UK. So there's a lot of variables to take in. So this is why I'm just trying to focus purely on technicals at the moment, mainly, and give you a slight insight in terms of the backdrop, in terms of fundamentals. Okay, so the daily chart, we already said that it's stalled, okay, as the euro obviously pushes higher. So again, as the euro pushes higher, what happens to the German DAX? It stalls. So just watch out for that inverse relationship. So if you're expecting euro to move lower, obviously you have to be bullish DAX, and if you're expecting euros to move higher, then obviously you bearish DAX. So if you are going to be buying the DAX, make sure you time it with the sell-off in the euro, given the fact that the daily chart now is coming into potential resistance on the daily. Again, one could argue that you are looking to move higher, but if infection rates move higher, if obviously the political uncertainty regarding Merkel certainly increases as well, we are looking for a potential stall. So it's hard, it's tough. Also in terms of US markets as well, we had stronger inflation data. Again, markets didn't even stop or even pause, just ripped higher. So it's really hard right now in terms of a fundamental perspective. All the fundamental variables, well, not all of them, but obviously higher inflation indicates obviously higher yields. Higher yields means obviously the cost of operating becomes more expensive, disposable income becomes lower, and obviously that's one of the biggest harbingers for growth. And therefore, obviously, you'd expect European or US equities to move lower, but your US equities pushed higher, given the fact that even stronger inflation did cause the Fed to be dovish, or should I say hawkish, should I say, and everybody's interpreting that as being dovish, and therefore pushing equities to new highs. And it seems like the only people that are actually buying right now is retail. So is that a true breakout? Again, I'll discuss in terms of US equities, but again, US equities do have a bearing in terms of European equities, because if they continue to push higher, then they'll force European equities to push higher as well. So in the meantime, we've got the pivot high at 15290, 15300 in the German DAX. Let's see if we can pace that next week. 10-minute chart, we certainly seem to have not closed the gap for now. Previous resistance equals support here on the 15200. We've got horizontal resistance at 15250. If that breaks, then obviously you've got the 15300 resistance. Downside, you've got gap fill at 15100, and obviously you've got gap fill below at 1500 as well. So 15, or should we say 15,000. So keep an eye on that in terms of German DAX. Let's quickly bring up the French CAC, given the fact that the scenario, the cases have certainly gone out of control there in terms of France. Now, monthly chart, key resistance zone. Hence a reason why I'm cautious on European equities. Weekly chart as well, key resistance zone. Okay, daily chart certainly has broken out, but is it a fake out? That's the question, given the fact that we've got the scenario in terms of the situation in terms of euro, okay, pushing higher. Again, one would expect European equities to fall quite hard, and that hasn't been the case. So one has to respect that for now. Okay, in terms of the gaps below, obviously there's multiple gaps. I mean, you've got the gap here. Bring up the gaps. So as technical analysts, gaps are quite important. Okay, so we've got quite a few gaps below in terms of them closing. Okay, in terms of the French CAC, so watch out for those gaps below. So again, a doji candle, volume, nothing really to be seen, nothing really of any major importance. In terms of the 60-minute chart, again, very impressive French CAC, to say the least, given the fact that the concerns are with regards to the French lockdown, cases are going out of control. Mr. Macron, a bit of a dimwit, to be honest with you, in terms of his politics. Certainly nothing really to show for in terms of intelligence or even any political skill. And yet this market continues to rip higher, and it's basically down to QE. As long as the ECB keep printing and buying, it's going to be very hard to justify a sell-off, a significant sell-off, to say the least. A short-term sell-off, fine. Significant sell-off, very, very tough, okay, especially in these thin liquidity markets, given the post-Easter break as well. So that's certainly something to take into account in terms of liquidity. We've got two unfilled gaps below. In terms of the pivot high, we've seen at the moment is 6190, so watch out there. And then obviously previous resistance equals support around the 6150 zone, and gap fill is seen at 6130, and obviously 6100. So that's the story in terms of the French CAC. European equities or Euro stocks, this is the one that I tend to trade quite often. This index, solid. Okay, look at that breakout on the weekly chart, impressive. Okay, let's just bring up the next levels of resistance here. Apologies for that, that's part of the mentoring program I'm running with one of the students there. Okay, so here we go. Okay, so nothing of any real significance in terms of the weekly. Those levels have all been breached from what I can see. The near real next one is around the 4150 zone, but very, very impressive, as you can see in the weekly chart. French CAC, beyond my understanding as to why that's been pushing that so significantly higher, given the rising infections, given the total botch up in terms of the vaccines program, and also the total disregard to fundamentals as well, given the growth rates, etc. So impressive to say the least in terms of Euro stocks. Let's just quickly bring up the volume data. No, there's nothing here for Euro stocks, unfortunately. Okay, so again, doji candle, nothing of any major bearish turning point. 60-minute chart did point in a potential double top, so I'm going to be watching that for now. Again, bullish. I mean, even the gaps are not closing on this one, so very, very impressive in terms of Euro stocks. So hats off to the Euro stock traders on the bullish side. In terms of the FTSE 100, now this index has been quite strange. Okay, so let's just quickly bring this up, especially with regards to the weakness in oil. Okay, so let's quickly bring up the weekly chart first of all. So weekly chart at present, I'm not sure why these lines are not drawn already. Okay, so let's look at any key inflection points. That was one of the most important ones from what I can see. Okay, and that's basically where we're languishing at the moment. Okay, in terms of the weekly, let me just get rid of all this mentoring program details here. Okay, so right, okay, so weekly chart, right, so previous support equals resistance here at 7080. Previous support equals resistance, again, I wouldn't say previous support equals resistance, but it's basically an important juncture, let's just put it that way, okay, an important juncture on the chart. Inflection point has been here, okay, and then we've had quite a few inflection points here. Nevertheless, it was negated, but having said that, it was respected recently, and obviously we breached that. Okay, so keep an eye on that. In terms of the market daily chart at the moment, again impressive. It's taken out the key resistance zone that's just above 6900. The next potential resistance is seen around the 7024 and the 7044. So given the fact that S&P 500 breached the new highs on Friday, let's just quickly give you an insight here, even though I did say I was not going to discuss this. So look at that thrust higher. Okay, very, very impressive. So S&P just literally continues to move higher. So it looks like Mr. Biden certainly is triggering that rally to a large extent with his infrastructure plan, even though obviously it's not passed fully. And obviously there's a debate with regards to 25 or 28% tax. Markets just don't care. Literally buying. And the volume certainly seems to be steady on the buy side as well. Nothing significant in terms of an increase, but nevertheless, price action never lies, and the market rips high, even with a stronger inflation reading as well. One would have thought the market would have been spooked with that inflation reading, given the lofty heights on the S&P. This market is truly formidable at present, okay, in terms of the S&P, and even tech has started to rally as well. That was another thing that really surprised me as well, given the stronger inflation print on Friday. Yet the Nasdaq continued to rip higher. Obviously there were concerns regarding yields, etc. None of that. Concerns regarding a shortage in terms of chips. Again, there's a meeting that Mr. Biden has basically organized, from what I can see, in terms of semiconductors and their ability in terms of supply. So again, that is a cause for concern. US sanctions against Chinese supercomputer centers may have limited impact. So again, it's China versus the US war. And also Mr. Fauci talking about the J&J. So it looks like it's all about stimulus, and the markets just don't care. So again, I'm very baffled in terms of a fundamental perspective, especially Friday's data in terms of US. I expected US equities to certainly shift lower, profit taking at the back of stronger inflation data, which would have caused a gap lower on the FTSE and the European equities as well. But that wasn't the case. So the S&P or the FTSE, as long as it stays above the 6900, obviously one would argue on the bullish side, and the next target would be 7020, 7040. But nevertheless, we did see weakness on the FTSE, whether it's stalling, consolidation, etc., etc. So we started off around 6950, 6960, went down to support at 6905. We then retested 6940, and then right back down again to 6915. So for now, intraday double top at 6940. Support is seen at 6905. Gap fill below is seen around the 6885 level. Previous resistance equals support, and then if you got horizontal support 6860 and gap fill at 6822, and then further gaps below as well. So watch out for those in terms of the FTSE 100. But as long as it remains above that key 6900 zone, one would certainly argue on the bullish side on the daily chart, unless it's a fake out. Okay, and then obviously the next targets you're looking at around the 7030, 7060 zone on the FTSE on the long side. Now the FTSE 250, just to cross-reference that as well, as you can see the daily chart certainly has broken out in terms of resistance as well. Okay, so very impressive to say the least. That's one hell of a move. Whether you want to attribute that to the fact that US equities are pushing higher, whether you want to attribute that to the fact that the UK vaccine take-up has been super duper, and that's what's being interpreted as being bullish, and obviously the recovery trade or the post-COVID trade is certainly in full swing. That's your obviously interpretation. As a journalist or as an analyst, one could certainly attach anything to that to justify that, but nevertheless, in terms of price action, obviously we continue to move higher, and that needs to be respected in the interim. Next potential resistance, given the fact that we've broken the key one around the 3900, then the next potential key support equals resistance is seen around the 4000 zone. So let's see how we perform there. But for now, as long as we stay above the 3900 on the FTSE 350 as well, obviously the bulls certainly have the control or total control from my understanding and my perspective. Let's quickly bring up the chart of Brent. Now again, this is one of the things that concerns me. Now we've got a H&S formation brewing, and then we've got a bear flag formation brewing here as well. So that's two arguments for Brent to move lower, which in turn obviously sends the FTSE lower. So again, there seems to be some sort of disparity there. Okay, in terms of obviously the chart of oil and the FTSE 100, which is quite interesting. Okay, so I think I've given you more of an insight really in terms of the FTSE as well. Certainly remaining super bullish. 6940 double top resistance will certainly utilise for now to keep it capped or keep it at bay. If you break above 6940, and obviously the bulls are back in control, and you're looking at further short squeezes up to 7020 and 7040. It's all about that Kool-Aid. That's all I can say, folks. The Fed wants to be dovish in the face of high inflation, and it looks like the ECB have already threatened everybody to try and test them in terms of their QE program, and everybody wants to talk down obviously interest rates and talk down inflation, and everybody is playing this so-called currency game to depreciate and obviously gain an edge in terms of exports. And equities absolutely love it, with Bitcoin breaking the 61,000 barrier on the weekend. It really is all fun and games until the music stops. On that note, goodbye now.